Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Barjan, currency analyst, and today is Monday, October 30th. Our pairs for this week's analysis are the dollar yen, the euro dollar, the pound dollar, and the euro pound. So let's start first with dollar yen pair. We can see that although the RSI is holding well above the 50 neutral level, momentum is to the downside. If we have a quick look at the 4-hourly chart, we can see RSI has already slipped below the 50 neutral level. So there's clearly a strong downside momentum after prices failed to break above that key resistance level we've seen, which is around the 114.50 area. That was a resistance again back in July, and once again prices halted at 114.44. That is in fact 161.8% Fibonacci retracement of the down leg from 113.43 to 111.64. So further downside, we should see support coming first at around 113.40, then the 113 handle, which is the 78.6% Fibonacci. Then we have the 61.8% Fibonacci at 112.75, and then the 112 handle could also be another major support, but the key support here really is the 111.60 area, which is where the 200-day and the 50-day moving averages appear to be converging at the moment. If you do see the 50-day crossing above the 200-day, that would reinforce the bullish outlook in the medium term, which has in fact weakened. As you can see, the MACD here, the histogram has been slightly trending downwards from last week's top, and it's close to slipping below its red signal line, but should prices reverse higher and we see the 50-day moving above the 200-day, that would definitely support further upside. A break above the 114.50 area, we should see the next support, the next resistance coming at the 261.8% Fibonacci at 116.30. Let's have a look at euro dollar now. We can see that Head and Shoulders was formed after prices broke below the neckline at 1.1660. There is some upside momentum at the moment, although RSI is still well below 50. If we move on to 4-hourly chart, we can see again the RSI is heading upwards, so there is some upside momentum. Should we see that continuing, obviously we're going to have a resistance at that neckline level 1.1660. Above that we could see resistance coming at just above the 1.17 handle at 1.1715, but that would be the 78.6% Fibonacci of the upper leg from 1.1669 to 1.1879. Then we have the 1.1750, which is the 61.8% Fibonacci, the 1.18 handle, the 38.2% Fibonacci, and the 1.1830 area, which is the 23.6% Fibonacci, and also where the 50-day moving average is currently hovering around. But for a clearer upside shift, prices would need to break above the 1.1880 level, which was the top from back on October the 12th, and then such a move would potentially open the way towards that 2.5-year high from early September of 1.2092. You can see though the medium-term outlook at the moment, it is looking rather just about slightly bearish as well. The MACD is negative and below the red signal line. The longer term picture though remains more or less bullish, but we can see that clearly big drop below the 50-day moving average means that the medium term outlook has now turned bearish, although not extremely bearish, but nevertheless the risk is to the downside, with major support potentially coming at the 161.8% Fibonacci at 1.1540 and 1.1330 area, which is the 261.8% Fibonacci. Moving now on to cable, we can see the short-term momentum is looking rather neutral at the moment. Perhaps there's a slight upside risk if we look at the 4-hourly chart. There's clearly a stronger upside momentum. RSI has in fact already reached 50 neutral level, and on the daily chart again it's coming close to the 50 neutral level. Further upside for pound dollar, we should see well, actually it's already testing the 23.6% Fibonacci retracement level of the down leg from 1.3656 to 1.3026. The 23.6% Fibonacci is currently around the 1.3175 area, so it's already clearly testing that level with resistance coming from the 50-day moving average just below the 1.32 level. The next resistance to test is the 38.2% Fibonacci at 1.3265, and then the other one to watch is the 1.3340 level, which it failed to break above that level back in mid-October when it was the that brief recovery was halted at 1.3337, and then a break above that level could potentially clear the path towards that 50-month high of 1.3615 from September. In the medium term, the outlook is more or less neutral at the moment. Prices have been hovering around the 50-day moving average for some time now. And the MACD we can see is just below 0. But if we do see further weakness, the key support levels to watch is the 1.3026 level. That was the bottom from earlier in October, followed by the 1.2835 level, which is currently where the 200-day moving average is converging towards, and below that the other support to watch is 1.2520. And finally, we have Euro-Pound. Euro-Pound has, we can see the 50-day moving average proved a very strong resistance several times in October. At the moment, the short-term outlook is very bearish. RSI is below 50. We can see that big gap below the 50-day moving average. Immediate support should come from the 0.88 handle, which that would be the 78.6% Fibonacci retracement of the up leg from 0.8745 to 0.9032. Below that we have the 0.8750 area, which is also where the 200-day moving average is currently heading towards, and then further downside we could see potential support levels coming in at 0.8570 and 0.8280. Those are the 161 and 261.8% Fibonacci retracement levels respectively. But it's obviously the bearish outlook, it's not too strong at the moment. There is room for upside reversal. Immediate resistance should come at 0.8855, that's a 61.8% Fibonacci, and then the other next resistance to watch is the 0.8965 level, the 23.6% Fibonacci, and also that's where the 50-day moving average is at the moment. A break above that level would potentially open the way towards the 4-week high we had early in October of 0.9032, and a break above that would definitely clear the way towards that 8-year high we had in August of 0.9306, and that would potentially signal a resumption of the longer term uptrend. That's still just about intact, although we can see even the longer term bullish outlook is weakening as prices get closer to the 200-day moving average. That's it from me. Thank you very much for watching and have a great day.